back. You're watching Startup Central here on ET Now. Time to get to an interview with the unicorn PolicyBazaar, the founder, in conversation with my colleague Chandra Srikanth, talk about a whole host of contentious issues. Did SoftBank force it to look at growth over profitability, that is expansion over profitability? What is PolicyBazaar's views on what's happening with the screening of Chinese investors and the Chinese investments it has in the company? Here's an edited excerpt of that interview.
2018 and 2019, when we did not make profits, right? So effectively, actually, 2018 we were profitable, 19 and 20 profitable, and 21 we are profitable again. So what quite happened between in the years 19 and 20? Essentially, we wanted to grow. Everybody wants to grow, and we wanted to grow. And in attempting that growth, we invested in expansion of capacity and in marketing, which did not have a proportional impact or an immediate impact in terms of productivity. And thus, in hindsight, one can look back at it and clearly say and admit that maybe if we had put in that capacity at a slower speed, it would have been more efficient. And in fact, you know, sometimes when you expand capacity at a ferocious pace, it can not just have a lower marginal benefit.
After this answer,
it can sometimes have a negative impact as well. And that is because, you know, the new capacity you put in place also needs to be fed with marketing. And the new marketing you do is usually less efficient than your traditional marketing sources. And so it put a lot of pressure on a company which was profitable in 2018, which had to make losses effectively in 19 and 20, because we tried to chase higher growth through advanced, you know, aggressive investment in operations. I think in hindsight, if we had done slower growth, we would have maintained our profitability more. But you know, in hindsight, you always have to, at that stage, we thought we were making the right decisions.
Right. Yashish, taking off from there, so you're saying currently you're profitable, right? Or you're kind of swimming back?
Yeah, we are profitable right now.
Some of these decisions. What is the status now?
So we are profitable now. I think what we did,
and
let me explain. We expanded our capacity by about 100% in July 2018. And obviously our revenues did not double within 1 month, right? It takes a bit of time. So we've now grown into being able to use our capacity, which we had put in place in 2018. So we don't have to add capacity. So what you would notice is our capacity has not increased since 2018, but our revenues have kept going up. So revenues have gone up and they've kind of matched with the costs, and now we are profitable. Yes.
Said they are laying off over 1,000 employees. I just want to understand, is this the last of the layoffs? Will we see more happening as part of consolidation? What can you tell us about this?
No, I think we will continue to grow. All I'm saying is, you know, very rapid expansion of capacity usually does not imply growth in revenues. Growth in revenues come at its own pace. The market moves at its own pace, and that depends on consumer education. So you will see us continue to grow on a steady basis. You will continue to see us growing at 70-80%, but we would not put in capacity ahead of the growth. Our capacity will follow our growth as it happens, rather than be put there in advance of growth.
Yashish, a few days ago, you also raised an additional round of funding from SoftBank. So where are you going to deploy that? What kind of investments will we see in your businesses going forward?
So see, the two areas which we are very keen to invest in and improve in is customer service and you know, somewhere in product and technology. So you will see a lot of investment going into product and technology as well as customer services. in basically improving those further. So you'll see investment headed in that direction. But to be honest,
Right.
the capital we have, we may not use it anytime. We are comfortable where we are. We are a profitable company. We don't need to deploy more capital. You may see some small acquisitions happening, but a lot of it will not be used immediately.
Right. Yashish, in the last few weeks, there's also been a pushback from the government with respect to China. We saw 59 Chinese apps being banned. A few weeks ago, the FDI rules were amended, which will make it difficult for startups to raise money from the Chinese route. Now, you count Tencent as one of your many investors. I think Tencent picked up a 10% stake in PolicyBazaar last year. So how does this change things for you? Will follow-on funding become difficult? How do you see this whole issue? Are you also looking at de-risking your cap table?
So a few clarifications there. Tencent was a secondary transaction, not a primary transaction. So PolicyBazaar has never raised any money from a Chinese investor. And also when the secondary transaction happened, the relationships with China at that stage were quite good. We have specifically refused investment from a Chinese fund during Doklam, which was quite recognized in the investor circles. I personally have 4 generations of me, and so I would not raise from a Chinese investor right now, whether there was a rule or not a rule, and that there was no rule during Doklam, but we refused that investment. However, when times are good and when times are bad in our relationships with China, those are different times. And when the Tencent investment happened, the times were good, and it was a secondary transaction. PolicyBazaar never took money directly from Tencent. Tencent bought out the shareholding of Tiger Global. So just clarifying that. PolicyBazaar has never raised money from any Chinese investor.
Right. Final couple of questions, Yashish. Where you stand today, what kind of milestones have you set for yourself over the next 1 year or for the rest of 2020, 2021?
We today have a market share of roughly about 3 to 4%. We want to take it to 10%. With next two. So we want to be 10% of India's insurance sector in 2 years' time. We want to educate consumers more and more. We want to expand health insurance and life insurance in India. And I think that's basically it. We are expanding market share and we want to spread health insurance and life insurance. Those are our objectives. We want to do better customer service than we do today. And we want to have great products on our website so that consumers can benefit.
Right. And any other new areas where you see potential, for example, stock broking or wealth management or mutual funds? Those are some of the other areas that we see a lot of startups, fintech startups emerging in. So are you looking at some of these emerging areas, or will it primarily be insurance, health insurance? I know you're also involved in the Swasth Alliance. So how is this going to shape out?
We are going to be a lot more focused on our business than expanding into other areas. So we are not looking at getting into stockbroking or investment products. We are largely going to be focused on 2 sectors. One is insurance, which is health insurance and life insurance. And the second is going to be lending. We believe both these sectors, we have certain value additions. Sectors are there, we're not going to enter those as of now.
Right. So focus is going to be the key mantra for you. But Yashish is someone who, saw this growth fueled expansion, then you hit the pause button, focused on the basics again, on how to be disciplined and swung back to profitability. What would your advice be to entrepreneurs and startups who are perhaps raising funding and then they go on this expansion spree and it comes back to bite them. So what would your advice be to entrepreneurs, startups at this time?
See, I think we were always disciplined. And even during the expansion phase, we stayed disciplined. We stayed true to our core. It is just, I think the operational capacity we put in place was too large to be consumed by consumers at that stage. And so it caused losses. I think it was a mistake to hope that just because we put operational capacity, our growth would come. I think we are magnanimous in accepting that. There are no playbooks for entrepreneurs, unfortunately. Of course, you have to build your business, and every business has to be built their own way. But how to become an entrepreneur, there is no playbook for it. Everybody has to do it their own way. And I think people have different styles on what works for them. I am fairly conservative. I like things to make money before I expand them. But then that's not the only way. There are people who've done extremely well coming out. So I wouldn't, but yes, please only do things you believe in. Do not do things you yourself don't believe in. And don't try to convince yourself. Be very sure of every decision you make, because it's eventually your business, and it's eventually you who's going to be recognized with that business. That's the advice I would just give to people. Don't be short-termish. Always be sort of mid to long-term thinkers.